Hello, and in this video I'm going to explain the three types of expected move cones available in the EdgeRater charting module and how to use them. First of all, what is expected move? Well, expected move indicates a price range that a stock is expected to be within 68% of the time on a particular future date. So how is it calculated? Well, it's calculated using a volatility number from an option series. Different option expirations, and DTE is days to expiration, have different implied volatilities. So your 10-day to expiration option chain is going to have a certain implied volatility. Maybe it's 10%. Your 30-day to expiration option chain might have an implied volatility of 40%. Your 60-day to expiration chain might have a volatility of 45%, and so on. So each one of those volatilities is going to give a different range depending on how far you're projecting into the future and that volatility. So calculating expected move for various days to expiration yields a cone of expected moves projected onto future bars. For instance, here we're looking at a chart. This happens to be gold, and you can see that a cone has been drawn from the very last bar, and the cone gives an idea of what might happen, what the expected move might be on the upside, what the expected move might be on the downside. In this chart, it's just an indication of which option series, which days to expiration option series have been used for the volatility number to calculate that particular price point. So on the 3-day to expiration, that's 3 bars into the future, or 3 days into the future, not bars, because when we're dealing with days to expiration, we're dealing with calendar days. So 3 days into the future has a particular volatility number, which yields the first point on the cone here. Then 5 days has a different volatility number, and that yields the second 2 points for the cone. The 7 days has another different volatility number again, and that yields the third set of points, and so on and so forth. And as you go on, you draw out this cone, and you fill in the missing values with just interpolating the line between the values that you are able to calculate. But EdgeRater has also expected move cones not just based on the calculations from the implied volatilities, but also a cone that can be drawn based on historical volatility. And a third option is a cone which you can put on the chart, and you can specify a constant volatility, a fixed volatility number, to give you an idea of what for instance, a 20% volatility might look like if you project that out into the future. In the chart here, you see all the 3 different types of cone here. So I'm going to go into this in the software. Let's take a look. And so here I have a chart of gold, the same chart we were looking at before, and in the bottom area, I actually have a few implied volatilities. I have the medium-term ones, the 30, 45, 60, and 90, just to give an idea of what implied volatility was doing at each of the historical bars. Now, to get to the cone, if you come over to the chart scripts, open up chart scripts, and just type in, do a Control F for find, and type in cone, you will find that there are 3 types of cone, and then that's duplicated for specifying a particular historical date. So there's one set that's based on an offset from the last bar, and then there's another set which is based on a specific date. And we'll see how that works. So the very first one is and we won't deal with the date ones right now, we'll deal with the offset ones, because that's when you specify an offset of 0, you're dealing with the very last bar. So it's easy to say, you don't have to type in the date of the last bar. Okay, so EM cone offset. If I drag this over onto the chart, and for this I have to have had my chart set to show future bars, which is over here. I'm showing 60 future bars. And when I first put this cone on, the offset is actually set to 30 days. So what I can go do is change that to be 0 days. And you'll find then the cone gets shifted over to calculate from the very last bar. So now it's using the implied volatilities from the series of implied volatilities in the program to calculate the various data points and projecting that into the future. So that is one type of expected move. Now, all that's saying is that price based on the implied volatility of the options, price is expected to be within this cone 68% of the time, or one standard deviation. So another type of expected move cone in EdgeRater is the historical volatility cone. So EM cone offset, HV is historical volatility. I can drag that over to the chart and set the offset bars to 0. And now we're looking at the green cone. And the way that this works is it's giving a value for volatility for each of these days in the future based on that same number of days historically. So for instance, to calculate the point 30 days in the future, or 1 month, it's looking back 1 month in historical bars, figuring out what the historical volatility was for those 30 bars historically, and then applying that to the calculation to figure out the data point for 30 days into the future. So you can see that there the cone for historical volatility is narrower for the most part for the early, maybe the first 60 days, than the implied volatility cone. But when you get out to future dates, further future dates, it then does widen this historical volatility. And the reason for that is you'll notice as you go back in time, you're now dealing with more and more volatility. You have this big area of volatility down here, historical volatility, and that gets factored into the calculation for creating this historical volatility cone. So the idea of the historical volatility cone is just to give you an idea that if you had the exact same volatility that you had in the past, this is where you can expect price to be in the future. Whereas the expected move cone based on options implied volatility is purely based on current option pricing. And so this is really where option traders, the expected move that option traders are using. So this is the best estimate for option traders for expected move. Now the other one I mentioned is you have an expected move offset with fixed volatility. So if I drag that over here, set the offset bars to 0 and then I can play around with the volatility number. I might be interested for some reason to find out what a 10 vol cone might look like, or if I'm going through, I can just cycle through the volatilities and I can apply any volatility I like here. And so you might just be interested in seeing what different cones would look like at different implied volatilities, different volatility levels. So there you have it, expected move cones in EdgeRater. Very useful feature to give you an idea of where price might be at various points in the future. It is a very interesting calculation because the cone that's based off of implied volatility is using current option pricing to calculate the move. Now, this is the cone based off of implied volatility. So what if we just move this cone back to a point where there was more volatility? For instance, this date here, 3/18/2020. So I can either find out how many bars offset that is. Maybe that's something like 45-ish bars. Maybe, and then we can sort of play around and figure it out. Or I could use the date, EM cone date. And if I have EM cone date on here, I can actually type in the date in this format. I can say 2020, month, March the 20th, and then I can really hone in on the exact date. So I might use that one just for now. And I can adjust that date also using these arrows over here. So here's an example then, going back to March the 18th, 2020, using the implied volatilities, which as you can see down here were very high compared to normal levels of implied volatility for this particular underlying, which is gold. And you can see that an implied volatility level of that magnitude projected into the future prices that should fall within this cone 68% of the time. And actually those implied volatilities, even though they were incredibly high compared to normal volatilities for gold, actually did a very good job at containing the price. So was the implied volatility too high at that level? Well, not really. It exactly predicted pretty much where the price was going to be within that 68% of the time. It wasn't an over prediction. There wasn't too much white space underneath the cone. In fact, price did pop outside of the cone at several points. So that is an interesting point. So this cone is drawn then with approximately a volatility of 40 or 50%. So if we put on the fixed vol cone and we set we have a date version of the fixed vol as well. We can put that on and set that to the same date, which is March 18. And if I typed in 50 for the implied volatility number here, you can see that if you had a constant 50 implied volatility, the cone would actually look like the black line here. But as I said before, the implied volatility cone is based off of various actual option series. So it doesn't have a constant 50 volatility. It has a 50 volatility on the near-term day to expiration, near-term options, but as the options go further out, the volatility actually becomes less and less. So it's interesting to look at things like that. Okay, so expected move cones in EdgeRater. And the other thing in EdgeRater to do with expected move is there is an indicator called EM bands, and EM bands, if you drag that over to the chart, will actually show you the price should be within these bands 68% of the time, because they are actually projected into the future based off of an option series. At this point it's a 30 day to expiration option series, but we can change that to any of the ones supported in the program. So we could use the 120 day to expiration series, and so then they're shifted and projected into the future. So if price is outside of these bands at any point in time, it just means that the prediction was off for if you had drawn a cone, essentially, in this case 120 bars ago, price would now be outside of that cone in this area here, but currently we're outside of that cone. And the bands also project into the future too. Okay, so cones and bands of expected move in EdgeRater.